Hi there. Today is Thursday, the 17th of September. New unemployment numbers released over the past 7 days. 860,000 new people lost their jobs. Another 660,000 filed for the pandemic unemployment assistance, which is for freelance or gig workers. So your total's over 1 million. The 860 doesn't tell the whole picture. It keeps going. It's slightly down from last week, but this is compounded week after week after week after week. I know a lot of people who were promised to go back to work who haven't. Any of those in-home services, a lot of the jobs have been cut. Okay, the Fed is keeping interest rates low, possibly to 2024. So I guess the reason that they want to do this, or they think it's going to work, is because there needs to be inflation, right? And inflation is money within the system that keeps the economy going. So Jerome Powell and the Fed is buying a whole bunch of more debt on the open market through these banks. The banks are getting loaded with cash in the attempts to loan it out to people, right? That's their hope, that people with a really low interest rate at 0% will go out and buy that new car. Maybe they weren't planning on buying a new car for the next couple of years, but since interest rates are so low, they'll go out and buy a car. They'll go out and purchase a house. Businesses will take on the loans and the debt so they can continue hiring people. But hiring people or taking loans to pay for operating costs is not inflation. If you took a loan in a business to, let's say, add to your business, right? So if you're building an addition, or if you're buying new trucks to go out and do the work that's already there, that would be inflationary. It means you're getting assets and you're gaining long-term economic stability. Just paying for salaries doesn't benefit anyone except paying for salaries. I mean, you shouldn't have to borrow to pay your workers. I mean, that's a scary thing. Why have a business if it's not profitable, if it can't cover your expenses? And I don't know about you, but in this uncertain times, would you go out and buy a car right now? Would you add to your debt? I mean, the problem with zero interest rates is it really affects savings. It doesn't encourage saving, because if you put it in a bank and you're only getting very little money back on your cash, in theory, with inflation, it would only be worth, let's say, 82 cents next year, right? So if you have $1 and you put it in the bank, next year the dollar will only have 82 cents worth of buying power, because the prices are expected to rise. Therefore, that dollar buying you less. I guess what the Fed really needs people to do is to go out and spend money. That's what they want people to do. They're encouraging this ongoing debt-fueled society, which I think is all wrong. And I think a lot of people are changing their tunes, especially after this whole shutdown. I think people are re-looking at their assets and they're trying to pay down their bills. And maybe they have a credit card debt at 15%, but if they can take a loan out for, let's say, 3%, maybe it would be worth it for them to take the loan out for 3% to pay down the credit card. It's really hard to do that. Banks are being really, really stingy with the money, and you have to have an excellent credit score in order to even borrow now. I mean, there's pros and cons to low interest rates, right? And when the economy is strong and unemployment is low, everyone dreams of low interest rates, right? It's less expensive to borrow. And in good times, low interest rates can be a blessing. It encourages businesses and consumers to borrow and buy things. Loans put money into circulation, and circulation fuels the economy, right? So that's in theory. However, if you keep interest rates low for 4 years, like Powell is saying, he's expecting interest rates to stay low until 2024, What benefit is it going to have? Because why buy that car today if you can buy it 2 years from now at the same low rate? I think this is going to have an adverse effect on society. I think people don't want to borrow anymore. And maybe I'm living in a cloud, but maybe smart people know not to borrow anymore. I mean, if you have a job, God bless you, and if you think that you're going to have a job for a long time, go out and, spend $40,000 on that new car. But would I do that? Hell no. Hell no. So when people can't earn interest in a traditional savings account, what do they do with extra money, right? They put it into the stock market, or they put it into some other investment vehicle so they can keep up with inflation. But the stock market's not guaranteed now either. And I'm afraid that this whole stock market is going to pop because the valuations that they have on many of these stocks is not sustainable. There's no valuation there. Like, they're worthless. They're debt-ridden. If you really look at their numbers, it's insane. A liquidity trap happens when interest rates are so low that they don't deserve the normal function of spurring the economy for growth. Instead, they reduce the flow of money to the Main Street economy, and it goes into investment assets that don't produce employment, such as the stock market and paying down loans. All right, this means money doesn't flow through the economic system. When that happens, unemployment rises as companies lay off expensive workers or hire contractors and temporary part-time workers at lower prices. And when wages decline, people can't afford to pay for things like prices on goods and services, and those prices are forced downward, leading to more unemployment and more lower wages. And this is the danger of deflation, which is difficult to stop once the economy spirals out of control. And I believe we're headed there. And maybe, think about this. I tell you many times, I spend a lot of time, I've lived in Tanzania. I spend a lot of time there. I built a school there. They have none of this manipulation, right? There's no quantitative easing or money printing going on there. It is what it is. It is the market. The market bears what people can afford to spend. So I told you the price of rice, it went from $1 down to 70 cents. I talk to my colleagues there every day. Every morning, we're on the phone for about an hour. And I ask them, what's it really like there? Because when you read all the things, it says, oh, their economy's booming. And they said, their economy's not booming. Safari jeeps, tourism is down huge in Tanzania. And the people selling their safari jeeps are selling them for like half price just to get something from them, because the government has a hefty tax on vehicles for business and they can't afford it anymore. They can't afford to pay the tax on their business. They can't afford to run their business, and they don't know when their business is going to pick up again. Yes, Tanzania is open to Americans. If you want to go, it's a beautiful country. I would advise against it right now because of the COVID thing, but it is open and they're really hoping that tourism picks up. But who's going to Tanzania? Who's going to Kenya or South Africa or Rwanda or Uganda? It's a beautiful place, don't get me wrong. The safaris, the beaches, everything about it is beautiful. Great weather, great to get away in the wintertime. But who's going there? A $50,000 car is now selling for $22,000 because that's what the market can bear. That's what people hope to get out of it. People's wages have come way down. And if people were poor before, they're still poor. And if people were middle class before, well, they're heading into poverty now too. Business is down big. And that's what would happen in the United States, right? The prices would come down. Everything would come crashing down, which would lead to more unemployment, less wages. Everybody would get a cut in wage. Everything would come tumbling down. The price of housing is coming down in Tanzania. The price of land is coming down in Tanzania. Price of safaris hasn't come down yet. They have not reduced the park fees. Park fees are astronomically high in Tanzania. You want to spend a day in the Serengeti? It's $90 plus an 18% VAT per person just to get through the gate. Normally, low interest rates encourage loans, and loans add new money into an economy. The Problem Solvers Caucus, they're coming up, and President Trump wants to sign more money. He wants that money printing to go. He wants the economy to improve. He's not a Republican. Republicans are going to shudder at the thought of spending all this money. He wants to sign a bill for $1.5 trillion, and the Dems want that to happen. And listen, I understand people need it. I fully understand people need it. I don't know. I was reading another article today about businesses. If they can't negotiate lower rents, they can't survive. I was reading about this gym owner. She said she had her biggest expense was $32,000 a month in rent. $32,000 a month in rent somewhere in Ohio. If that's Ohio, heck, what the hell is it in Boston or, Dallas, Texas or Miami, Florida? Some little town in Ohio. $32,000 monthly rent. How can any business survive? What kind of gym, what kind of fees do you have to charge your members? And how many, members do you need? There's a lot going on in the world. Yeah, another 860,000 unemployed, 660,000 gig workers filing this week. Unemployment numbers are sky high. Evictions are going to follow when this whole moratorium ends. I don't care how low the interest rates go. You can't spur this economy anymore. All right, folks, that's a wrap. Thanks for watching. I really appreciate it. Let me know in the comments what you think of zero interest rates. Are you going out and buying that new car, that new boat, that new house? Are you taking advantage of those low interest rates? What do you think about keeping interest rates low for the next 4 years? All right, signing off. Have a wonderful day, folks.